Hi traders, you are welcome back to the Forex Geek channel. In this video, we are going to discuss two of the most powerful tools in the world of technical analysis, and that is the market profile and the volume profile. All right. Now, these two tools, um, they are often used interchangeably. Right. This is market profile, right? And then we have volume profile. The two tools are often used interchangeably by traders, but they have key differences that can affect your trading strategy. So, which one should you use and when? Now, let's just break it all down so you can make smarter trading decisions. And as always, if you find this video helpful, make sure to like, subscribe, and hit that notification bell to stay updated with all the latest tips and strategies. Now, let us just start with market profile, right? Market profile is a statistical tool used to visualize how the market spends time at different price levels. All right. Now, unlike traditional charts, which simply show price movement over time, market profile focuses on the concept of time spent at price. Essentially, it shows you which price levels the market has spent the most time at. All right? The price levels that the market has spent the most time at. And this can help us identify key support and resistance areas. Okay? Now, in a market profile chart, right? In a market profile chart, you'll see a bell curve or a distribution. The center of this curve represents the point of control or the POC. All right, now the price level where the market has spent the most time during a specific period is what we call the point of control. All right, the higher the point of control, the more value the market assigns to that price level. Now, the market profile also displays value area, right? We have value area high of VAH and we have value area low of VAL, which represents the range where most of the trading activity happens. Now, traders use these levels to spot potential breakouts or reversals. The beauty of market profile is that it helps you see not just the price movement, but the market sentiment as well, right? Helps you to see not just the price movement, but also the market sentiment. Okay. Now, for example, if price is consistently finding support or resistance at certain levels, you can anticipate potential reactions when price approaches those zones again. Okay, now let's just shift to volume profile, right? Let's shift to volume profile. Okay, okay. While market profile focuses on time-based distribution, volume profile focuses on the volume traded at different price levels. Okay, it's essentially a histogram that shows you where the most trading volume has occurred at each price level. Now, this allows traders to see where heavy buying or selling has taken place and where there might be key areas of interest. In a volume profile chart, you'll see a vertical histogram, right? Or basically a histogram bar or rather histogram bars plotted along the price axis. All right, and you're going to see that the more significant that level is, the wider the histogram. Okay, the wider the histogram, the more volume has traded at that price level, and the more significant that level might be. Volume profile also shows the value area, okay, which is similar to market profile, indicating the range where most of the volume has occurred. The point of control, the volume POC, in volume profile is the price level with the highest volume, okay, which is often a major point of support or resistance. Now, the main advantage of volume profile is its ability to help you identify high volume price levels, which can act as key decision making points. Okay, these high, sorry, these high volume levels often mark areas of consolidation, breakout zones, or points where the market may reverse. All right, by knowing where these high volume zones are, you can make more informed decisions about entering and exiting trades. Okay, so what is the main difference between market profile and volume profile? Well, it really comes down to the type of information that each tool focuses on. Market profile helps is more time based, right? Market profile is more time based. It shows you how long the market spends at each price level, helping you identify areas of market value and potential turning points. It's great for understanding the overall market structure and for identifying key zones where price could consolidate or break out. On the other hand, volume profile is volume based, okay, giving you a picture of where the most trading activity is occurring at specific price levels. All right, it's ideal for spotting areas where there has been heavy buying or selling, and which often precede major market moves. Another key difference is how they are displayed. Okay, market profile often uses a bell curve shape, while volume profile displays histograms. Now, while both show important levels, volume profile focuses more on the trading activity itself, while market profile gives you insight into the market's behavior over time. So, how do you choose between market profile and volume profile? Well, the answer depends on your trading style and strategy. If you are a long term trader or someone who is more focused on the market structure, then market profile might be the tool for you. Okay, it gives you a sense of where price is likely to find support or resistance and helps you understand the overall market environment. Traders who like to trade based on market context and who want a clearer understanding of where value areas lie often rely on market profile. However, if you're looking for more precise entry and exit points based on actual trading activity, then the volume profile could be your go-to tool. Okay, so it's especially helpful for scalpers or day traders who want to understand where the bulk of trading volume is occurring. By analyzing the volume at each price level, you can identify key levels of support and resistance that might influence short-term price movements. So to sum it up, both market profile and volume profile are incredibly powerful tools, but they serve different purposes. Market profile is best for understanding the market structure and the areas where the market spends the most time, while volume profile is excellent for identifying where the highest volume is traded, giving you a clever picture of where important price levels lie. If you're looking to get a better grasp of market context, market profile is the way to go. But if you need to understand volume driven price action, volume profile will give you those insights. Ultimately, it comes down to your trading strategy. Some traders even use both tools in combination to get a fuller picture of the market. If you haven't already, try experimenting with both and see which one aligns best with your trading style. I hope this breakdown of market profile versus volume profile was helpful. If you learned something new today, don't forget to hit that like button, subscribe to the channel, and click the bell icon to get notified when new videos drop. Thank you for watching, and I'll catch you in the next one.